Hey everyone, welcome back to Corporate Decoder. Today, Personalis Incorporated just filed an 8K, and I'm seeing some interesting votes from their shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company held its annual shareholder meeting, and the results of the votes are now public, giving us a peek into what the owners of the company think. This is a current report, meaning it is about something important that happened recently. For Personalis Incorporated, the big event was their annual meeting of stockholders, which happened on May 12, 2026. Personalis Incorporated, as the name suggests, is a company focused on genomics and personalized medicine. They are listed on the NASDAQ under the ticker PSNL and have a market cap of over $700 million. They recently had some headlines about them heading to conferences and news about their directors receiving stock awards. The main reason for this filing is to tell us how the shareholders voted on different company matters. Think of it as the company reporting back to its owners on decisions made. The meeting itself took place on May 12, 2026. It was held virtually, meaning shareholders could participate online, which is pretty standard these days. A significant number of shares were represented at the meeting, about 87.76% of all outstanding shares. This means the votes cast are pretty meaningful, as a large chunk of the company's owners were either present or had given their proxy to vote. This definitely constituted a quorum, meaning they had enough votes to make official decisions. The first big vote was about electing directors. These are the people who will guide the company, making key strategic decisions. 2 nominees were up for election to serve until the 2029 annual meeting. Let us look at the results. For Olivia K. Bloom, there were 75,695,538 votes in favour and 317,559 votes withheld. There were also 15,856,203 broken non-votes. Votes happen when a broker holding shares for a client does not receive voting instructions, and therefore does not vote those shares. For Woodrow A. Myers Jr. MD, the votes for were 68,240,509, with 7,772,588 votes withheld, and the same 15,856,203 broken non-votes. Both directors were elected. As the votes in favour far outweighed those withheld or the broken non-votes, it is common for directors to be elected with a strong majority in these kinds of votes. Next up was Proposal 2, which involved ratifying the choice of BDO USA, PC as the company's independent auditors for 2026. Auditors are like the accountants who check the company's financial statements to make sure they are accurate and fair. This measure passed with an overwhelming 91,586,300 votes in favour. There were only 34,421 votes against and 248,579 abstentions. This level of support shows that the shareholders are confident in the chosen auditing firm. It is pretty standard for shareholders to ratify the auditor's selection. Finally, Proposal 3 was about approving, in a non-binding advisory vote, the compensation of the company's top executives. This is often called a say-on-pay vote. It allows shareholders to voice their opinion on how much the executives are being paid. This proposal received 75,549,455 votes in favour. However, there were 384,918 votes against and 78,724 abstentions. There were also those 15,856,203 broken non-votes. While the majority voted for the executive compensation, the number of opposing votes and abstentions is something to note. It indicates that a portion of shareholders might have some reservations about the pay packages. This vote is advisory, meaning the board is not legally required to change anything based on the outcome, but it certainly sends a message. The report was signed on May 13, 2026, just a day after the shareholder meeting. It is signed by Aaron Tachibana, who holds the important roles of Chief Financial Officer and Chief Operating Officer. This tells us he is a key figure in managing the company's finances and operations. Now, looking at these votes, especially on executive compensation, we see that while the overall direction of the company seems to have shareholder support, there is a segment of owners who are perhaps scrutinizing the pay of the top brass. For a company like Personalis Incorporated, which is in the rapidly evolving healthcare and diagnostics sector, aligning executive incentives with long-term shareholder value is always a key area of focus. The strong vote for directors and the ratification of auditors suggests confidence in the company's governance and financial oversight. However, the say-on-pay vote is a good reminder that shareholders are watching closely what happens with compensation. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe and join our community on Discord, linked in the description below.